Hello, hello, and welcome to ACCA PM revision class conducted by KBM UK. And this is the latest material we're using. Over the past weeks, we have finished all these chapters, and now it's about revision. Your exam is three-part, section A, B, and C. In this video, we will be going over section A only, 15 objective tests. And this particular presentation from ACCA, hope it helps, especially doing part C, discussion, explanation is gonna be needed. Without any delay, let's start our first 15 questions. This is a recent mock paper for September. Your exam is 3 hours. Section A, all the questions you got to answer anyway. 15 objective test question. Then in section C, B, there are 3 bigger questions, 5 each, total 15 more objective test questions. And then number C, you will have to write a couple of compulsory questions. So starting from section A, all 15 questions are compulsory and must be attempted. Remember, there is no negative marking, so you do not leave your question undone. At least logical guess is welcome as well. Number 1, are the following statements about ABC true or false? So I, 2 given. Reading I for you. Activity-based costing is not suitable for service. Activity-based costing suitable for service-oriented businesses as well as a production-oriented business as well. So this is a false statement. It is suitable for service-oriented business. Number 2, activity-based costing is a form of absorption costing. Yeah, it's a part and form of full costing as well. So that is my true answer. 2 marks into the pocket. Moving on to next bit. Number 2. It's good to read the requirement always. What is the target cost? Yeah, target cost. Sales minus profit is basically your target cost. But let's read to the nearest whole number. Let's read the question. The following price of product B is set. Selling price is 120. For the coming year, expected to be 500 units. They would like to sell a return of 25% on the investment. So on the investment, 25% return, investment is 200,000. Can we do that? So on my calculator, 200,000 times by 0.25, 50,000 return they want, don't they? $50,000. And product B will be required in the coming year. Okay, what is the per unit given? So what is the return per unit they wanted? Divided by 500 units. So 50,000 divided by 500 units, 100 return they want. Profit 100 want, and selling price is 120. What should be the cost then? 20 should be the cost. Your targeted cost is 20. That's your couple of more marks. Number 3. The following measures may be used for the purpose of setting targets in life cycle costing. Right? So, which two of the fund should management seek to maximize? Time to market. No, they'd like to minimize the time. Break even, they also would like to minimize the break even time. These two are not the answer. Return on investment, everybody would like to maximize it. Commercial life, a product would like to maximize it. So these two are going to be my answers. Another true false question. Question number 4. Task number 4. Are the following statements about environmental management accounting true or false? Okay, effective management of environmental costs can be a source of competitive advantage. Environmental cost, source of competitive advantage. Yep, that is correct. That gives us competitive advantage. Cost regarding the environmental, that's true, nothing wrong with that. Next one, environmental cost should be treated as production cost. No, it is not part of production cost, it is treated separately, so that should be that, right? Brilliant. Number 5, can you read the requirement again? What is the relevant costing? Incremental cost, future cost, opportunity costs, right? These are my relevant cost, variable cost. Of material D and E to be included in the contact cost. Okay, let's contract basically. Contract. A contract requires 300 kg of D and 100 kg of E. Right. So look at the information given. The following data is available. In inventory D, 200 kg of D is there. There's a historical cost. There's a current market purchase price, market price basically. If you go in the market, you'd like to buy. If you'd like to scrap it, you can scrap it at this price. And E, in inventory, you have a lot of E, 500 kg, and that means, you know, you don't have 300 kg of D. If you give some D, you need to sacrifice current work in production, isn't it? Right? Right. So, but E, you have a lot of E available in the inventory 500, and they can tell you here D is regularly used. The products are purchased within the business, whilst E is no longer used. So if E is no longer used, the opportunity cost here, we can scrap it for 90 pence. So the relevant costing would be 90 pence. But D in the use of the production, and if you take out D, inventory D, so you'll have to take out from the regular production. So the current market price is your relevant costing or relevant pricing, right? So 300 needed for D. The costing should be at the rate of this 3.25. Can you do that? 300 times by 3.25. 975. 975. We do have either this or that could be the answer. And how about this one? 90 pence times by 100, 90. So we got an answer. This is number 3. 1, 2, 3. 3 is your answer. Number 6. A company makes a single product which it sells for 20 per unit. Okay, let's read the requirement then. What is the margin of safety? MOS. Remember the formula for margin of safety? Budget sales minus break-even. Sales minus break-even sales. Right. Okay, let's read the question now. Selling price given, fixed cost given, contribution to sales ratio, CS ratio basically 0.25, yeah? And sales revenue given. Using the CS ratio and fixed cost, can you not find the break-even sales? Budget sales is basically, this is your budget sales or sales. 525,000. And how much is your BEP sales? Fixed cost. What is the formula? Fixed cost divided by CS ratio. So how much is the fixed cost? 100,000. And CS ratio 0.25. Let's do it on screen. Divided by 0.25. 400,000. Right? 400,000. So how much is your margin of safety? 120. 525 minus 400 is 125,000 in terms of money. But hold on, they asked in units, yeah, the whole number. How do you get in terms of units? Cost, selling price per unit given, so divided by per unit, 20. 125 divided by 20, 6250, straight away, no fraction. 6250. This is our Sixth question. Number 7 looks quite a bigger one. Can we read this one? What is the shadow price per machine hour? Now, what is the idea of shadow pricing? Shadow pricing is the producing of one extra machine hour. How much maximum would like to give for that machine hour? There will be constraint, limiting factor. Machine hours will be limited. But if you'd like to produce one extra unit, 1 hour of machine hour going to need it, how much are we willing to pay? The answer is cost or contribution per unit of machine hour. Per machine hour gives you whatever the contribution, not more than that. How much what we get, what we pay basically. Let's read the question now. A company manufactures 2 products, X and Y, using the same machines and the same work teams for both products. There is a restricted supply of both machine time and labor. 2 constraints are here. That's why it's a shared pricing linear program going to be. Following budgeted data is available. Machine hours, product X, half an hour, product of 1 hour, and maximum hours available, 2000 machine hours. And labor hours, this and that. Contribution per unit even given. Our aim is to maximize the contribution, but this time they're asking for shadow price of machine hours. That's what our requirement. Okay, it has been calculated using linear programming that contribution will be maximized at, they calculated for you 13,600 by making and selling 800 units of X and 1600 units of Y. Now, using the available machine time and labor time fully. Now, of this information, asking you to find the shadow price per machine hour. So, 0.5x plus 1y equals to 2000, isn't it? And 2.0x plus 1.5y equals to 4000. What are the steps in shadow pricing? Steps in the shadow pricing is machine hours will increase from 2000 to 2001. 1 machine hour we're gonna increase. Contribution will be maximized where we will see it. 4 steps we're gonna work out. Let's take these small spaces here. Okay, so we have 0.5x plus 1y means just y equals to, we're gonna 2001 extra unit. What is the cost of 1 extra hour? That is my shadow price going to be. Okay, that's number 1. Step number 2 is, which is this one, 2x plus 1.5y equals to 4000. Now let's multiply this one with 4. This is our step number 3. Multiply 1 by 4. So 0.5 times by 4 is 2 x plus 4 y, right? Equals to 2 times 4 is 8. Trust your calculator always. 8004. 8004. Now minus this with that and find the value of y. So minus 2, basically this 2. So 2x minus 1.5y if you minus from here and equals to 4000. Yeah, so what do you get? You get 4004, and you get 4 minus 1.5 is 2.5y, and 2x minus 2x is nothing. 2x to x minus is gone. Yeah. So here you get 2.5y equals to 4004. So y equals to 4004 over 2.5. The most cheeky way you can do is better. So it takes you little time. 1601.6. 0.6. That's the value of y. Okay, so that value of y you're going to put into the step number 1 to get the value of x. So 0.5x plus y is basically 1601.6, right, equals to 2001. Now 0.5x, I'm going to take 6 equals to 2001 is here. This plus becomes minus 1601.6. So again 0.5x equals to how much? 2001 minus 1601.6, 399.4. 399.4 divided by 5. If I take this 5x equals to 0.5 divided by 0.5, not 5, divided by 0.5, 798.8. Yeah, a little longer working you got to do. That's the value of your x, right? Now to maximize our contribution or profit is, what is the contribution given here? 5 for x and 6 for y. 5x plus 6y, isn't it? Right? So 5x plus 6y. So a value of x we found a which is 795 times by 798.8 plus 6y is basically times by 16, yeah, 1601.6. Can you do that? That's already there. Times by 5. If you do it, 3994. So that gives you 3994 plus 6 times by 1601.6, 9609.6. Okay, if we add these two, plus 3994, 13603.3, 136. Right, that is the contribution after one extra machine hours being taken. But what is the contribution existing given? 13,600 based on this 2,000 and 4,000 hours. 13,600. So 13,600 for one extra machine hours. The price is 3.60. Yeah, 3.60. That's my shadow price. That's a longer way of doing it. Yeah, the 3.60. Right, superb. Okay, we have a little, no, this is the theory question number 8. Let's get into number 8. 50. What is the question? Which of the following reduces the reliability of this estimate? Okay, we have some estimates. So just give me a minute. Let me erase this bit. It's a recorded version, so you can rewind and rewatch it. Now, 50 pairs of the value of x and y, x ranging from 15 to 45, were used to obtain regression equation. So it's a good sample being used, where is y equals to this minus that, 480 minus 5x. The correlation coefficient is minus 0.95. It's a very strong negative correlation. Yes, like when prices is going down, supply is going up. It has been estimated that when x equals to 10, y equals to 430 is within the range, but x10 following reduces the reliability. Look at this, the ranges is basically from 15 to 45. Yeah, so that is a concern here. Let's read the option. A sample size used is good enough. Sample size up to 45 is good. The magnitude of the correlation coefficient is all right, which is related to correlation being negative. Yeah, is near about 1, so 95% ish, and it's negative means negatively correlated. That's all right as well. X equals to 10 being outside the range of the sample, that reduces the reliability of this estimate. So that is going to be our answer, number 8. Number 9. Which of the following statements about big data is not correct? Big data, the 3 V's, bigger volume, yeah, velocity, variety. It can, let's read it. It can provide a source of data regarding customer preference. Yes, it does. Its volume can overwhelm the supply. Yeah, it's a big volume. Privacy and security concerns represent an issue. That can be, yeah, because it's on internet. But can you read the other one? It can be used to obtain 100% response rate to targeted customer. That's not a correct one. Yeah, it's not always 100%. 100% assurance. You cannot give it. Right? Right. Number 10. Which of the following types of organization is or are totally dependent on the information system? Information system. So, insurance companies, airlines, and banks, all of it, come on. Yeah, information is the heavy data information database. Yeah, banks, airlines, heavily insurance companies as well. Right. Number 11. Which of the following is a frequent consequence of using a participative style of budgeting rather than authoritative? Participative is bottom up, yeah. Authoritative is top down management. So senior management lose the control over the budget decisions. No, they are still involved in it. Yeah, so they do not lose the control. Participative budgeting encourages a blame culture when actual results turn out worse than they are participative, they are working in it, they don't blame to their own work, yeah. Rather, the top-down approach, they blame it. More time is needed to agree budgets than with top-down. That is absolutely correct. Yeah, when the top-down is done, they just give you the budget. You have to agree it. If it is from the bottom, people disagree. More time needed. That should be answered. Can you read the other one? There is a loss of management responsibility of budgets. No, they are involved in it. Yeah, right. That is our number 11. 12, 13, 14, 15. Yeah, right. So, you know, the exam is 100 marks exams. So, divided by, you got 60 times by 3 equals to 180 divided by 100, 1.8 minutes. Isn't it? 1.8 minutes. So, for 1.8 minutes times by 15, 1.8 times by 15, you should get 27 minutes. 27 minutes. We're doing with a bit of explanation. That's why probably taking a little longer. You should take even less time here when possible. Number 12. Which of the above may be used to close the target cost gap? Target cost gap, okay. A manufacturer of multiple products has just introduced target costing for new product development. It is developing a new product Z. There is currently target cost gap for product Z. And the company wishes to close this gap. Yeah, that is the target cost. try to do. The product development team have discussed the following, and which of the above may be used to close the gap. Okay. Number 1, raising the selling price. No, you raising the selling price above the current target. It's not related to target costing. Costing should be all the non-value items. We're gonna take it away and then minimizing the cost. That is better one. Reducing the time allowed, got a quality problem. That's not going to be our answer. Using non-standard components where substandard they meant to say. So no, do not compromise with the product. Removing non-value added, yeah, that's a good one. That's the one, features from the product. So that doesn't affect the value, but still cost goes down. So number 4 should be, this answer should be 4 only. Okay, 13. What is the direct material usage operational variance? Yeah, remember the formula? It's a usage. So the output should use now. Should use now. Yeah, because the operational usage you're going to do. So how much should use now? How much they did use. Comparing to did use. This is what you're going to do and multiply with the standard price. So can we read the scenario? A company uses standard costing for its product. The budgeted standard cost material 4 kg 3. This is standard price. We're going to use that standard price as well. Actual production 1800 being produced, this much being used, and this is the cost. But hold on, it was recognized in retrospect that the standard cost per unit for material should have been, it's not 4. The operation, in the operation it should use 4.5. The budget would be changed. Should use now is 4.5. For how many units? 18 times by 1800. So should use, can you get the should use? 1800 units should use 4.5, 8100 kg. But they did use 8300 kg. Of course, they used more, which is adverse. More by 200 kg adverse. Yeah, kg. If we multiply with standard price at the rate of 3, 600. Yeah, 600 is adverse here also. Makes sense. Okay, what's the residual income? Notional cost you do with the capital amount. Let's read the question. A company has a divisional structure. Division Y in the period just ended achieved return on investment. Okay, they give you ROI. Oh, here is the capital. 4 million times by cost of capital should give you notional cost, but we need a return as well. Can you read the question, then do it? Of which 25% working capital, remainder constant of non-current asset, all of it is your capital. Okay, working capital, non-current asset, all makes your capital. The depreciation charge for the year is non-cash expense not needed for ROI. All right, remember how you find the residual income? Profit minus notional cost, isn't it? Profit minus notional cost. Now notional cost is times by 0.9, which is 360,000 is my notional cost. What is my profit? Profit is 20% of the 4 million. 20% of the 4 million is my return. That is my profit. So times by 0.2, 800,000. 800,000 is my profit. Okay, 800,000 minus 360,000. 440,000 is my residual income, and I can see it's here. That is that. Okay. To finish this section with number 15. Are the following statements about use of the balanced scorecard for perspective? Yeah, setting performance targets and measured performance, true or false. There should be more than one target for each of the 4 performance perspective. Yeah, should be one or more than one, but not too many. That's true. Targets that are set for the 4 performance perspective must be consistent with each other. It should be consistent anyway. And that is that. That's all in this video. Hope it helped, and best of luck with your PM preparation. See you in the next video with section B.